Well, good day, everybody. I hope you're having a good day. So, the presentation is financial best practices for your business and why you need a business plan. And give you a little background. I'm a retired CPA. I worked in Maine in public accounting, serving small and mid-sized businesses, doing tax returns, financial statements, and audits for businesses and not-for-profits. I then worked for 21 years as the controller and then chief financial officer for a small investor-owned electric utility in Maine. And then I finished my career as the director of finance for a community college in Maine. So I've had a lot of experiences working with different clients over the years. And before I start, when we talk about financial best practices, you could probably go online and see a lot of information on that. And some of the things we'll talk about today um, are are things that you'll find on a lot of those lists, and I've added a few based on my experiences. So again, I encourage you as if you are looking for things that you might want to consider for your business. Certainly, you can use these as well as others that you find online. Okay. My slides aren't advancing. How come? Here we go. Okay. My opinion, best practices in businesses help increase the likelihood for your business survival. Again, these are sometimes things that are can be common sense, but sometimes people get so involved in their businesses, try to do the day-to-day sales activities and serving customers and so forth, that they don't take the time and work on some of these things. The first thing I suggest to my clients when I'm talking to a score mentor is mentoring a score client, I should say, is to build a team. People tend to, when they start a business, will invest in equipment and things of that nature. But I also suggest that they invest in professionals because I believe good advice leads to good results. Talk to an accountant or a tax advisor because tax work and statement preparation is going to be something that will be required by you going forward. And especially when you start a small business, sometimes there are tax strategies that you need to consider depending on your own personal tax situation. Or if you have any investors in your business, there may be some things that can be done up front if done and planned on appropriately to help them get a little bit of a return in the early years of a new business. I always always speak to an attorney. The attorney will help you with organizational filings, contracts, agreements, for example, review of leases and things of that nature, and other legal issues. One of the things that I mentioned to my clients when I'm mentoring them is, sometimes it could be a domestic partner, it could be your business partner. They have other assets that they want to protect. So if you willy-nilly set up a business structure for your business, it might meet your immediate needs, but it doesn't necessarily give the other quote unquote uh, parties protection. So you may want to have an attorney look at those and make sure, to the extent that you can, that you're safeguarding those other assets. I also advise them to work with various insurance agency, not only for property and casualty insurance, general liability insurance on on the business, vehicles, workers' comp, and some point employee benefits. And the reason I suggest that people meet with a team and based on my experiences, sometimes after the fact, to go back and correct a problem that might have been able to resolve up front when you're first starting your business. Um, it's always a lot more expensive, especially if you're dealing with payroll taxes, sales tax. There's penalties, there are interest, and things of that nature. So it's always wise to do things to the extent that you can upfront, and at least uh, it might save you some liability down the road. Again, building a team. And that's developing and hiring trusted and qualified employees and contractors. If you can have, for example, someone providing bookkeeping or accounting services, develop specific job responsibilities. That way, each individual knows what their specific tasks and responsibilities are. Ascertain the education and work experience required to perform the job. For example, if you're a business trying to come up with an online presence, you wouldn't want to hire someone who's not ever had any experience in developing an online platform. So you really need to say, okay, what skills do I need for this particular position? And interview and hopefully hire someone with that skill set. Delegate responsibilities subject to supervision. You learn quickly that you can't do everything. So even though you've defined the job responsibilities for each of your employees or contractors, you still have to know what they're doing. You still have to be supervising them to make sure that they're doing what they're required to do. And then certainly cross-train. If you're a small business with few employees and someone is out sick for a period of time or whatever, and no one else knows the functions and job responsibilities for that individual, that means you might have to step in and do that job. Well, that's taking you away from some of your more beneficial tasks that you do for the organization. So, to the extent that you can, you need to be able to build some uh, some teamwork amongst your employees so that if someone isn't there for a period of time, someone can step in and do their job. So it's very important to do that. But in any event, irregardless, you need to know what's going on within these various activities. Keep business activities separate from personal activities. You see this and probably have discussed this with your business advisors. You need to, especially if you're a small business and you are the owner and only employee, there's a tendency to think, well, everything's mine. Well, when you're dealing with a business, especially if it's incorporated, you really have to pay attention to what is business and what's personal. So keep separate checking accounts, keep separate credit cards. It doesn't mean that you can use a personal card depending on what it is and then reimburse yourself. But to the extent that you try to keep the businesses separately, I encourage people to keep business credit cards versus personal credit cards. Loans in the business name, even if they're personally guaranteed by the owner. Uh, this is an area that sometimes people, will go to a financial institution and come up with a loan. And if it's for business purposes, you should have the business name on the loan rather than your personal name. It makes it a lot easier and cleaner uh, for record keeping and for if payments have to be made, you're making them out of the business account for business loan. Loans to business from owners or from the business to the owner must be documented, and they should have required terms. Now, the interest rates are prescribed by the IRS and the Treasury, and those are easily accessible. If you're making a loan for a certain term, there are interest rates that are suggested by the IRS and the Treasury. And by the way, in situations where these terms are not stated, and if interest has to be imputed for whatever reason, if you're a IRS is auditing the books of the business, they're going to impute interest based on those rates. So you might as well, when you set up a loan, from the business to you or from you to the business, you might as well describe that rate in the loan documents. Due dates and payment terms. If it is a loan, most loans have a due date and prescribe when payments will be made. So you even if it's between you and the business, you should state those in the loan documents. One of the critical things especially in this regard, is with payments to businesses or from businesses to owners. One of the things that gets scrutinized frequently are what are these payments for? So, for example, if I've seen situations where, let's say the business is set up as an S corp and the owners make business payments to themselves, there's plenty of case law that indicates that if those payments to the owners are not classified, the IRS may come back and say, well, is this compensation or is this in fact a loan payment or a payment of undistributed earnings? And the situations where that's cropped up is when the owners are not paying themselves sufficient salaries in terms of the work that they're doing. So if you classify those payments, then no one can question what those payments are. So again, document those payments. One of the critical things about, keeping, the business separate from your personal activities is most businesses have a capitalization issue from time to time. What does that mean? Well, there's not enough cash in the business. And so consequently, that may require new monies going back, a cash infusion by the owners back into the business, or the fact that maybe they can't withdraw funds for the business in the form of dividends. But you can document this and do it if cash is going to be permanently left in the business, then call it what a capital stock issuance or a loan, whatever the case may be. But capitalization, because a lot of small businesses, especially early on, are undercapitalized. And when you're looking for additional loans and so forth, that's something that will be reviewed by the bankers or the financial institutions that you're going to. Establish a workable accounting and reporting system. The reporting system should provide you whatever financial information is needed for the owner to make decisions. So what does the owner need? That should be the critical function of your financial system. Now, there are certain things you should adhere to for certain, but you also need to focus as you structure that system that it's going to provide you with the information that you need. Some of the things that most people focus on is allocate or classifying sales and revenues by customer, products, services, etc. That way you can track the sales activity of the enterprise. The other one is to track spending. And one of the common things that people will start looking at is what are variable expenses versus my fixed expenses. A typical, for example, a typical example of a fixed expense is if you're renting property, you're paying a monthly rental payment. That's a fixed expense. It's not going to it's not going to change with the level of activity. Okay. In some cases, property insurance, again, is a classic example of a fixed expense. If you're paying a premium to insure the property, that's not going to change to the level of activity. However, a variable expense might be if you're in a retail environment and you're buying inventory from outside sources, well, obviously that activity is going to change with the level of activity depending on your sales. So the purchases of those items are variable. And so that's the nature of it. The key there is when you're planning cash flow, you know what your fixed costs are. You've got to cover those month to month, year to year, and so forth. However, with the variable expenses, and sometimes another classic case is advertising. Well, sometimes you're not going to advertise depending on how things are going in your business. Certainly you don't want to completely eliminate advertising, but you may change the volume of activity depending on the level of sales activity in your business. And the other thing I point out to people when they're looking at their system is beware of analysis paralysis. And that's the point of, again, going back to the financial information that you receive from your reporting system should provide you the necessary information for you to make business decisions. However, if you're tracking a lot of different activity only because you think you need to, well, you have to sit back from time to time. Am I trying to track too much? Um, if I'm tracking this, is this helping me make a business decision? So some people get caught up doing a lot of analysis and can't use that information to make a decision because there's too much. Develop customer credit policies and procedures. Uh, a lot of times, when you're dealing with different customers, especially if you're offering customers credit, you need to know what are the standards in your particular industry. So if, for example, the standard is for your customers, if your competitors are offering them a 2% discount if they pay within 10 days, well, it may be something you want to consider. Okay. And especially if they're going to uh, pay you within 30 days, okay, that's usually might be the standard for your industry. So you really need to look at what are my competitors and what are the standards for the industry. Define roles, policies, and procedures. For example, if you have uh, a large group of sales reps out there working, you really wanted to identify what they can do and what they can't do, especially when you're dealing with a situation where there seems to be a lot of returns. Someone other than a salesperson may not be the best person to make a decision about returning, uh, collecting an item as a return. Okay. So someone other than that person may be given that responsibility. So you have to identify those policies and procedures. And if you're not sure, sometimes it's wise to talk to your accountant or your business advisor, because they may be dealing with similar types of businesses and can kind of give you an idea what others are doing. Know the deadlines for tax filings, critical payments such as payroll taxes, sales taxes, and so forth, and certain legal notices. And most small businesses will have a reminder system. These are the things that need to be paid or done on these particular dates. I remember early on when I was working with some of my small business clients, and if you've worked and had worked in your small business for a while, the payroll tax deposit requirements can be a little difficult from time to time. And this one particular client decided they were going to go to a biweekly payroll system, and which is all well and good. I mean, that's fairly common, but they were used to making monthly payroll tax deposits. Well, lo and behold, the first time that they had 3 pay periods in a month, well, obviously their liability changed and they didn't meet their payroll tax deposit requirements. So I had to sit down and explain to them, you have to look at your liability and look at the payroll tax deposit requirements to see when you have to make that payroll tax deposit. So, once I got them straightened out, they were fine. But those are the types of things you have to work with and remember that from time to time, things come up that you have to go back and say, okay, what's the rule? So, like, for example, another case would be sometimes year-end bonuses that get paid out. Well, that changes your payroll tax responsibilities and liabilities. So, I can't pay that like I would normally pay. I've got to go back and say, okay, this is my liability. When is that due? And change accordingly. One of the things that I suggest is to invest in accounting software. The most common one is QuickBooks. There are other platforms out there. And when one sets those up, I think it would behoove you to find someone who's either done a QuickBooks system or a system with a particular platform they're using, or perhaps your accountant. And it's critical to make sure you start off on the right foot. And part of that is in setting up that that accounting chart of accounts to make sure you've got the right classifications that you need. Managing cash flows, and this is always critical because the survival of the business requires sufficient cash flows at critical times. Not every business has the same cash flows from day to day, month to month, and so on and so forth. There are spending cycles and activity cycles. So the small business owner has to know what their cycles are. And I think the classic case would be, for example, if you're in a retail operation and you're trying to gear up for an inventory, say for if your if your prime activity is for the holidays, then you have to go back and say, okay, when do I need to have my inventory in to start to meet those holiday demands? Well, obviously, when you're buying inventory, you're going to be required by the vendors who are selling you the inventory to pay within a particular period of times. And it may be months before you generate the cash on sales, okay, to replenish your cash account. So you have to know when those cycles begin and how you're going to take care of that immediate cash requirement. So you also need to know especially if you're selling items to customers, what their payment habits are. So, for example, even though you offer a discount, let's say to a customer, and let's say it's 2%, and if you pay within 10 days, well, first of all, you have to define days. Is it business days? Is it calendar days? And secondly is, people will cut their checks, quote unquote, on the last possible date. And because of mailings and things of that nature, you might not get that for 3 or 4 days. And then secondly, once you deposit in the bank, it may take 3 or 4 days, business days, to clear that check. So you have to kind of know, if I'm selling items to particular customers based on their payment practices and based on the time period it takes to clear their payment through my bank, when am I going to have those funds to use to pay my bills? So those are the types of things you have to uh, understand when you're starting to look at your spending needs. Focus on critical cash expenditures, not only amounts, but crucial dates. And going back when you're looking at cash flow. For example, if I have my building rent, when is that due? If I have loan payments, when are those due? And so you need to factor that into your cash flows when you're looking at the cash that's being generated or needed for your business to meet these needs. And anticipate cash shortfalls and develop a plan. Retain cash in business to meet short-term needs and or secure working capital loans from a financial institution. For example, using my illustration of the retail business, and so, for example, to uh, have enough inventory for the holiday sales period, that may require you to start ordering in October with the payment sometime in November, which is well in advance of when your sales, actual item might be sold in November and December, let's say. So, during that period when you're buying inventory and you need cash to pay off those vendors, there's going to be a period of time when cash could be tight. So if you have cash within the business, you want to set that aside. Again, within the business could be in a short-term investment account and things of that nature, to have that available, knowing that, you know, early November, mid-November, I may need this to meet the vendor payments. Or in the meantime, in advance of that period, work with a bank for a working capital loan. Okay. And again, if you walk in and talk to your banker, that loan may not be available within a couple of days. So you need to know how long that process takes before you have a working capital loan in place to meet those short-term needs. And in some cases, if if the business owner has some funds available from an outside source in their own accounts or whatever, again, they can make a personal loan to the business for that short period of time. But again, document the loan, document the interest payment rate, document the payment terms and things of that nature. And if you're familiar with Excel spreadsheets, you can do a lot of these cash projections with Excel. I know, for example, when I was with the electric utility and we had periods of time when we were monitoring our cash flow, we have a series of worksheets trying to anticipate when some of our large customers would pay so we could plan our cash flow accordingly. So you can use Excel and if you maintain it and pay attention to it on a regular basis, it can be something that you can use going forward. Review financial reports monthly, but not less than quarterly, generated by your accounting software. So the basic financial statements, typically one would see that would be available. And I know, for example, QuickBooks provides these, and I know other platforms do that. And if they're set up in your system properly, you can generate a profit and loss or an income statement, a balance sheet, and so forth. And if you're not familiar with those statements, I always encourage my clients in the past and my SCORE clients today to go online. There's lots of tutorials online that will explain these statements to you. There's guides that you can download to have for reference. And if you're not sure, then you can always talk to your accountant, because even though you're not an accountant, you should at least understand the fundamentals of a profit and loss statement or a balance sheet, because this is, if you will, your scorecard. Okay. And especially if you're trying to compare yourself to people in your industry, and certainly AI provides a resource that one can go in and can get information through AI for your particular industry to kind of give you an idea, for example, how you're doing with some of the basic, financial ratios. So again, depending on what's relevant in your particular industry, you can, for example, get a gross margin, a calculation, a gross margin percentage, a quick ratio percentage on balance sheet, current assets, and things of that nature. One of the experiences I had when I first started out in public accounting, I had a client that I was working with, and they frequently had to visit their loan officer at the bank. And we worked diligently to prepare financial statements for this individual. And I sat down and reviewed the profit and loss income statement with them, the balance sheet, and so forth, to prep him before we went to meet with the banker. Because from time to time, the bankers will ask, they'll have the financial information because they've requested it from you. And so they'll ask questions. So when we went in for the interview, sat down with the client, and the banker asked about the income statement, and the client looked to me and said, "What's that?" So I immediately said, "Well, obviously the message didn't reach the client that when we had met before. So, but it behooves you to have a basic understanding of these financial statements, so you don't have that situation crop in your own situation." So a cash flow statement can be prepared internally, and as I mentioned before, it can be done with Excel worksheets and things of that nature. So the other thing is why you need a business plan. And most people say, "Oh, well, I needed the business plan when I first started my business. I needed a business plan because I was looking for that grant or a business loan to start up and so forth." But really, you need a business plan because it's an ongoing tool that you use so you can continuously evaluate and plan for your business as you go forward. So again, it goes back to, Even though when you started your business plan, you were relying on a lot of other information. Now that you're in business, you have a lot of information, a lot more information than you did when you originally started your business. But the general principles are the same. So you have to make a strategic assessment. What are the challenges and opportunities for your business? So, you know, you have to make an assessment of the business climate in your industry, in your area. And especially if you're in a particular area, you know, how are things how are things going in our particular area for certain my business? We all know I'll use the restaurant business as an example. Uh, we seem to have a lot of restaurant closures in the winter months because it's a period of time where it's fairly slow. People are paying their holiday bills. They're paying the heating bills that are coming in for the winter heat season, and so there's not a lot of extra cash to spend on an evening out and so on and so forth. So, unfortunately, that's a period of time when it's very tough for people in the restaurant business. So again, when one is planning, if you're in that industry, you say, okay, how are we doing? What's the business climate? So to make an assessment of how the business's goals line up with what they're seeing in their area. What are the strengths and weaknesses of your business and meeting the challenges and or opportunities of your industry and or the operating area? And the basic question is, how are we doing? How are we doing compared to our competitors in our industry or in our operating area? And sometimes if you're a small business owner, that's difficult because you're the major decision maker. And so consequently, what do? Have a little, uh, you know, quiz yourself? Well, sometimes what you have to do is use some of your advisors. Maybe it's key employees within the business. Maybe it's it's your attorney, because sometimes if the attorney is well aware and if he's a member of your team, knows what's going on in your business, knows what's going on in your area, or your accountant the same, and get their impressions of how you're doing. Okay. And most of the time you'll get a fair assessment. Customers and markets. It doesn't hurt to go meet with the customers. I've seen a lot of small business people over the years that sometimes barricade themselves in their offices or whatever. And that's not the wise thing to do. You need to go out and meet with those customers and ask them the tough questions. Are they happy with your products and your services? If there are things that they're not happy with, they certainly will tell you. Because again, there are competitors out there that I'm sure they're visiting on a regular basis to try to encourage that customer to, change their purchasing from you to them. So you have to know, how are my customers reacting to our business? What are some new products and services that can be sold to these customers? Maybe there's something out there that they're looking for and you've not been able to provide to them. And if it's feasible, can you do that? But unless you ask the question, you'll never know. Who are potential new customers for existing or new products and services? Just like others are looking at your customers, you should be looking at their customers and making a point of visiting with them. And you don't have to put the hard sell on, but just get an idea, have a very friendly conversation. Is there anything I can help you with? Have you tried this product or what have you? It doesn't hurt to have those conversations with those entities. And then develop market strategies to retain existing customers and obtain these new customers. What do I need to do? Could be pricing. It could be the types of products that you're offering. But what are the things I need to do to be able to do more business, retain a customer, or or get new customers? So once you've described some of these things and have developed your strategies, then you have to look at how are we going to produce these new products? How are we going to increase our availability of products to new customers and things of that nature? And that's all based on operating plans. In order to meet this new demand or perceived demand, what do we need to do internally to be able to provide those customers products and services? The biggest, if you're offering and planning to offer these products and you can't deliver, that's the worst thing you can do. Obviously, we've all been there because it doesn't take very long before this, former customer that, or this current customer that wanted a new product and you can't deliver, well, they're going to go elsewhere. Or if it's a new customer that is, you know, going to you in anticipation that you can meet their needs and you can't, well, they're not going to be very happy as well. They're going to move on. So you have to look at the plans that you need to do. What do you need to do internally to provide those products? What personnel and or contractors with the necessary skill sets are required to deliver the products or services, especially if it's a new product that's a little bit beyond what you're offering presently, but you find that there's a demand for that product. Do I have to hire people who have an understanding and can produce this new product? Or is there somebody out there that's producing that product and can provide it to me so I can sell it to my customers? Are there suppliers that can provide materials to produce new products and services? And this is primarily for manufacturing operations. Is there something there that, you're developing a new product? Do you have this, can you find a supplier that can provide you with whatever you need to be able to produce that product? And sometimes that is not as easy as one thinks, okay, depending on the product itself and what is required for that product, especially if you're dealing with metals and things of that nature. Where can I get this product? Where can I get these metals and things of that nature? And the equipment that's required to produce or deliver these new products and services. I mean, it's one thing, even if it's something that you're already doing, in order to meet the new demands for a current product, maybe that means you need to upgrade what you have for equipment on the floor if you're a manufacturer. Maybe you can't produce the volume that you have with the equipment that you currently own. Okay. I mean, you can always add an extra shift. That's part of the planning and so on and so forth to meet the required demand. But if it's an older piece of equipment, it may be inefficient. You may have some outages, downtime, and so forth, and you may have to decide that there's a new piece of equipment that, yes, it's expensive, but it's going to meet the new demands, and also hopefully will be less expensive to maintain. So those are some of the decisions you have to make. The key point is you got a plan. You got to be able to make those, consider those factors. So once you've identified products, you've identified your production needs, both from a personnel and an equipment requirement, then you have to develop the financial plans in order to get the resources that you need. For example, if you're buying a new piece of equipment, well, that may require going to a financial institution. It could be the manufacturer of that particular piece of equipment. It could be to a bank. The key thing is they're going to want to, number one, have financial statements for the enterprise based on, the past fiscal year or the current fiscal year, whatever the case may be. But they may want to look at projections that you have, anticipating what this new investment in personnel and equipment and so forth, what your projections are, the financial results of those decisions. So you need to be able to, at least have a plan put in place to show them what could happen and what the probability of these activities, what they will generate. So cash flow planning to assure sufficient cash flow to pay these personnel, contractors, and vendors, and the development and retention of lending relationships, that assure cash credit lines are available and appropriate for borrowing and leasing arrangements as required. So this is, again, a critical function, but it really is a result of all of the steps I've talked about previously. Business continuity and exit strategy. This is an area, I think, when you're looking at business plans, especially for businesses that are in existence, there isn't much consideration of these critical elements. And I think going forward, especially with a new business, the idea is once you start a business, it's going to continue for some period of time. It has an unlimited life, regardless of some of the key people in the business. So what one has to do is to look at this and say, okay, how do I continue the business with, the personnel or the human resource at the UL that I have now? And if it's my business, if I'm the sole owner and so forth, at some point in time, I want to be able to hand this off to someone else. So what's the strategy I'm going to use to get me to that point where I can gracefully leave the business and it's going to continue on its way? Okay, because it really is in some cases with some small business owners. I mean, this is their child. Okay, developed it, they've grown it and so forth, and their legacy is the continuation of the business. So a couple of things that have to be considered. Identify key personnel in the organization who are critical to continuous operations. So that really is an assessment by the owner or owners of the business, are who are the people in the organization that we have to continue. Okay, and who we want to have join us in perhaps some type of ownership arrangement. Determine the retention strategy for these key people. How do you entice them to stay? What are the owner or owner's plans on retiring or selling the business? I mean, that has to be something that has to be identified. It could be early on. Maybe the owner says, well, I want to be in this business for 10 years. Well, if that is the thought on day one of year one, and it's subject to change, then you have to say, okay, what's this business going to look like in 10 years? And kind of, determining a strategy to get to the 10th year period when the owner says, well, I'm leaving the business. Well, how does the business continue? And develop the strategies regarding departure of the owner or key employee. And some of the things that people do not take into consideration is, what if this key employee leaves the business? Unfortunately, sometimes it's by death, sometimes it's by injury or whatever. How does the business continue? And so some of these strategies have to be developed and discussed internally. Now, with some family businesses, sometimes it's easier, and sometimes, it's a matter of identifying the key family members that should continue with the business. And sometimes with these, family businesses, sometimes it's not a member of the family that may be the best choice to lead the business going forward, but someone that may be an employee today. So how do you work within that dynamic to determine what is the best course of action for the business? Okay. And then here's my little screen on SCORE. I will say I've been a SCORE mentor for almost 9 years now. So SCORE is a national organization, and John Anderson is involved in SCORE as well. And so we're very proud of the things we do and trying to help small businesses throughout the country, and especially in Maine. So I see there's someone in chat with a question. Oh.
Larry, I wanted to also mention that Larry's probably wouldn't mention this, but he's one of the the chapters at the very best in the entire country. That's the Northern Maine chapter or part of our SCORE Maine. And Larry, congrats to you and the whole team. The best in the entire country.
Yeah, it was sort of a surprise to all of us. There's only 12 of us, and we serve from Knox County to the Canadian border. So, but we have a lot of support from our fellow mentors in Maine. And so I look at it as the Maine team also had a very important role in that recognition. So I'll
See,
be
I said
happy.
he's modest.
I'm happy to answer any questions if you have any.
One of the things, Larry, I'd like to make sure that everybody knows is that you'll be receiving a copy of this presentation along with the slide deck in just give us a couple days, but we'll send it out to you and to anyone who registered. We'll also be uploading this workshop into the SCORE Maine YouTube channel. That's something where you can not only find this workshop, this webinar, but anything else that we have put on. We actually put it right up and archive it right there, and you'll find that there are a variety of different workshops that you may be interested in as well.
And if you have specific questions and want to contact me, feel free to um, at SCORE as well. So
Right.
you can request, a mentor session with me, whatever the case may be. So hopefully it was informative. Again, it's a topic, um, and again, not knowing what everybody's background is, but I find that these things, uh, as I said before, sometimes even if you've been in business for a few years, you kind of have to sit back and remind yourself, oh yeah, I need to be doing more of this.
Hmm.
So, and
Larry, we
I
have, oh,
yeah, go
excuse
ahead.
me. We have one question from Melissa Abramson, not peculiar or particular to the presentation, but she said, if we move to another county and haven't been working with SCORE mentor, should we try to get a new mentor in our current county?
If you've been working with a SCORE mentor, I think, and John, you probably have your own ideas. I think you just continue
Right.
with that mentor. Now, SCORE has from time to time assigned mentors to folks in different states, depending on the mentor skill set. So
Right.
it's not required that you change mentors if you've moved to a different area.
And especially if you have a good relationship, a good working relationship, because it's not so much the mentor. We all communicate remotely for the most part, and say for me, say if I'm not as smart in financial services and that part of the business plan as Larry, I was your mentor, I would simply give Larry a call and ask him to sit in on a session with us and get you up to speed there. And that would go for anybody else, like in manufacturing or in legal type of works. We just reach out and we pull in the people who can help, and it's mostly remote and very, very easy for us to do that.
In fact, I work as a co-mentor with a Northern Maine mentor who had a client, and this particular mentor at the time had a background in metal fabrication. And I helped him with a client who is in Oklahoma looking to buy a business in Arizona, and they wanted some help with some of the financial projections and things of that nature. So that's not uncommon, John.
Wow.
So we work together.
That's amazing. Well, if you do have any other questions, please don't hesitate to get in touch with us. We'd love to make sure that you're taken care of.
Okay, I see for new it says.
I think people are saying thank you and how awesome you are, Larry. And
Huh.
if you do need
Well,
a SCORE mentor, don't hesitate to just get right on score.org and you can choose the expertise areas or your particular mentor or whatever, but we'll make sure that you get assigned one. All right, Larry, is there anything else you'd like to wind up with before we cut these people loose?
No, I'm good. I hope everybody hopefully it was informative to everybody. I guess we'll find out when we get our evaluations, but
That's right.
I
You'll
hope
be
you have a
getting a
good day.
short survey.
I hope you get a good day.
All
Have a
right.
good day, folks.
We'll see you later. Larry, thank you very much again.
Oh, yeah. Thanks, John, for your help.
Roger.